Next, we have a panel focused on infrastructure and trade. Think about what Lord Paul Boateng was saying. Keep that in mind as this panel is going on. We're going to turn now, as I said, to financial gaps, deploying structured and transformational national infrastructure, railways, roads, those kinds of things. Now, guiding this panel is a seasoned international trade expert who serves as the head of West and Central Africa at UK Export Finance. I've known him for, I think, more than 10 years. More than 10 years, we've crossed paths. Deep understanding of exports, credits, risk mitigations, and, of course, transcontinental trade and all it takes to get the deal done. He's going to take the stage now to lead a session on building new bankable pathways for trade and infrastructure finance in Ghana. Please welcome Stephen Gray, OBE, and please, moderator, and also the guests, please come on stage and you'll also be introduced. Thank you so much. Thank you so much.
Thank you, Michael. And if my panelists can join us on the stage, please. Just whilst they're doing that, ladies and gentlemen, good afternoon, and welcome to this panel for the new path for financing trade and infrastructure in Ghana. As you've heard this morning, this is an important conversation because Ghana is at a moment where ambition, necessity, and opportunity are coming together this very moment. Ghana is seeking to position itself not only as a strong domestic economy, but one of the principal trade and logistics platforms for West Africa, and dare I say, gateway. But that ambition depends on roads, ports, energy, water, housing, digital systems, industrial infrastructure, and financial architecture that allows all those assets to be built, operated, expanded over time. Roads are not only roads, they are trade corridors. Ports are not only ports, but they are gateways not only to the African markets through the AFCTFA, but to also other global markets. Power and water systems are not only utilities, they are foundations for productivity, manufacturing, agro-processing, health, education, and urban developments. And digital trade finance platforms are not only financial tools, they are mechanisms for making Ghanaian businesses more visible, credible, and more financeable, and for capital to flow with less frictions. So the challenge is not whether Ghana needs infrastructure. That is clear, it definitely does. But the deeper question that today on this panel we will explore is how do we finance it in a way that is sustainable, bankable, investable, and capable of creating long-term value? We're very fortunate to have a panel that brings together different but complementary parts of that financing ecosystem to explore that question. And if I can ask my panelists to introduce themselves one by one. Richard.
Hello. Can you hear me all right? Okay, so good afternoon. My name is Richard Agbenu. I'm the Chief Commercial Officer for Ghana International Bank. You know, Ghana International Bank has been in the City of London for 66 years, and we've been quietly supporting Ghanaian businesses and also expanded into Africa. Thank you.
Good afternoon. See if that works. You can hear me? Okay, great. Good afternoon, I'm Heike Harmgart. I'm EBRD's Managing Director for... You can't? Okay. Sorry. Is that better? Yes, that's much better.
I love it.
So apologies. So hi, I'm Heike Harmgart. I'm EBRD's Managing Director for Sub-Saharan Africa. For those of you who don't know who EBRD is, it's the European Bank for Reconstruction and Development, and we are headquartered here around the corner in London. And this is our latest expansion, and I'm super excited because Ghana just applied to become our 80th shareholder. The application is in the Parliament, and I'm really excited to talk a little bit about infrastructure solutions that we have now started to implement from Lagos to Nairobi to Dakar, Cotonou, or Abidjan, and about all the exciting opportunities we see for investments in Ghana. Thank you.
Good afternoon, everyone. My name is Ohene-Afoakwa, and I'm the Managing Executive for Corporate and Investment Banking for ABSA Bank. For over 100 years, we've been partnering corporate and investment banking institutions to empower Africa's tomorrow. We really pride ourselves in being a bank that understands risk mitigation, structuring, and empowering the growth of businesses in Ghana. I'm excited to be here. Thank you.
Good afternoon, everyone. My name is Socrates Afram. I'm the Chief Finance Officer for GCB Bank. the first indigenous bank in Ghana and the largest in Ghana today. GCB Bank was formed to promote indigenous businesses and also to promote indigenous individuals, because at the time GCB came onto the scene, it was believed that indigenous people were not being supported by the foreign banks. In this case, I'm talking of then Standard Chartered and then Barclays Bank. And so GCB has played that role, and I must say that we've happily coexisted with them. We compete, we cooperate, we work together to underwrite transactions. That is GCB Bank for you.
Hello, my name is Nana Dwemoh Benneh, and I think I'm the only panelist who knows everybody on the panel. So hopefully I can see in between whatever you say. I run Ghana Infrastructure Investment Fund. It's the youngest company on the panel. It's a fund that was set up about a little over 10 years ago by the government of Ghana, mandated to catalyze private sector funding into key infrastructure projects in the country. And so we're very excited to be here because infrastructure is the latest buzzword.
Thank you very much, panelists. And as you can see, we have both international, domestic, DFIs, and dare I say, sovereign investments organisation in GIF. But panelists, we've heard today that Ghana's ambition is to become West Africa's leading trade and logistics hub. From where each of you sit, what is the biggest constraint today that you see in that dream being realised? Ladies first, perhaps.
Well, it's quite interesting because 15 years ago I sat on a panel and I was asked the same question, and I'm going to give the same answer, unfortunately. I think it's, and I mean, I like to be practical. We can talk about the likes of infrastructure. Of course, it's important. Capital is important. Risk is important. But the thing is, if you want to be a leading West African hub for trade and logistics, how comfortable are West Africans in your country? There's a saying that when there is free movement of people, goods move freely. So if West Africans are comfortable with doing business in our country, trust me, we will be that West African hub. Now, what are the things that we have to do to make that happen? That includes things that have been talked about this morning, but I mean, even simple things like, we are surrounded by French-speaking countries. How do we make the French-speaking countries comfortable when they come into Ghana? Yes, I'll leave the technical part for all the people on my right, but I think we have to talk about some of the basics. When people are comfortable doing business in the country, trust me, they would bring their business. Now, having said that, at Ghana International Bank, we see this happening. We see some of our customers that have taken businesses from Ghana into Burkina Faso, into Cote d'Ivoire, and we see that flow happening. We would like to see it happen more often, but I think we have to start from somewhere. Thank you.
So maybe I speak a little bit about some of the technical things that we feel ease countries becoming hubs of in logistics and in trade flows, while fully agreeing that you have to make your neighbors comfortable so that your neighbors want to trade with you. But I think it's also all of these instruments coming together that makes a location successful. So we need the short-term trade. We need people taking short-term risk with correspondent banks around the globe to help pre-export and import financing. So we need some short-term liquidity that's reliable every day for everyday trade. But then, of course, trade also requires these very long-term investments in infrastructure, in ports, where you ideally want to bring together global, regional, and domestic expertise. And you want to have a lot of very patient capital, so being there really for the long run and for the long haul, I think. And then you need trade I think trade is a little bit sometimes like a racehorse that gets really nervous easily and spooked, as we've seen now with places like the UAE that, has such a center of trade, I think. But so it is really about reducing the frictions in good times, because none of us can predict when the bad times are happening that have none of our faults. but so reduce the frictions in good times so that, you know, these fast-moving goods can really move quickly. So I think, I mean, yes, the Africa Free Trade Agreement is a great step, but I think lots of the fellow panelists have been talking about implementation also for a while. We need to accelerate the implementation in good times. We need to make sure that the connectivity between rail, port infrastructure is invested in good times, so then that we can all have more resilience when shocks arrive. Maybe I stop here.
Okay. Ellen, Socrates, just picking up on a couple of points there. Richard said the same question was asked 15 years ago, and he's given the same answer today. But we've also heard short-term risk and reducing friction during good times. From where you sit, from 15 years ago to today, do you think those are the real issues, or is there something more fundamental that's causing the question from 15 years ago to be presented again today?
Thank you, Steve. Let me respond by saying that the question of movement, it looks like there's no political will on the part of our governments to sign up for free movement of goods and services and people on the continent. Because as of now, even the AfCFTA, several governments have not signed up to it to facilitate the movement of goods in Africa and also to facilitate payment.
Ghana's not one of those.
Ghana has signed up, but most of our neighbors and most of our brothers and sisters on the continent have not. But on the technical side, what I would say is documentation. Documentation on the import side, we have a huge challenge with SMEs when it comes to documentation. I have colleague bankers here, the CEO of the Ghana Association of Banks is here. We've had a number of fora, a number of interventions. It's still a big challenge. So banks are ready to support, but the documentation to come to support banks' financing and also meeting regulatory requirements is the biggest challenge I see. On the export side, standards and certifications. Most people will come show you products they want to export elsewhere. When you interrogate in terms of being certified from the destination countries, it is almost always lacking. Apart from few companies who are able to scale, that the most SMEs struggle. And that is the more reason why banks are unwilling, in most cases, to finance such trade transactions.
And Ellen, is that your experience as ABSA?
Okay. From where we sit, there's enormous opportunity out there. The biggest challenge is structuring, getting the bankable transactions to really close. Why do we say this? There are instances where investors don't include the banks at the early stage for us to bring out the risks so that we can put together mitigants. So it's important that we all co-create from the beginning to ensure that the right mitigants are put in place. Structuring is the biggest issue. Then also tenor. There are instances where investors would want to use short-term funding to really do a long-term project. And this is where we need the DFIs, the insurance companies, to come in. So we work together to solution the clients. We need long-term funding. Example, if you want to process 50% of our cocoa, we need to put up factories. And you can't put up a factory within 3 years and get returns within 3 years. We need long-term funding to really come in. Then also, we also need to look at digital trade. How do we support all these investors to really go out there and trade locally, regionally, and internationally? Because after you've financed, and at the end of the day, there's no output or outlet for these trades, how do you get your money back? So for me, in summary, 3 key things. Risk mitigants in place during the structuring, the right structures, and also we need to make sure that we have the right off-takers to really buy the solutions or the products once we really are able to produce. Thank you.
Thank you, Ellen. So Nana, yes, please do. So Nana, you're in the space of infrastructure, and GIF have done some amazing work in supporting the creation of the gateway platforms with the investments in Takoradi Port. We've also seen MPS, a UK registered company, invest over $1 billion in expanding Tema. What are you seeing as the key constraints for developing yet further?
Well, thank you very much, Stephen. I think over the last 10 years or so that GIF has been in existence, we've been privileged to being part of some successful infrastructure projects that was able to attract some of the patient capital that Ellen is talking about. We've seen how that has panned through, and after 10 years, some of the key lessons that have come out are very clear to us. The issue with us is that most of the time when you speak to investors and you're trying to catalyze funds, it is not for lack of capital. Yeah? Most of the time, you are not having to argue with them about the availability of the capital. Most of the time, they want to see what your project pipeline is and want to see whether there's been a well-prepared feasibility study that has been done. And it captures part of what my colleagues have been saying as well. One of the things we found characteristic about projects that we normally originate is that we normally rush over that first phase, which is the project preparation and the feasibility, and go straight to talk to investors about bringing in the financing. What then tends to happen is that it increases the risk of the performance of the project. Because at GIF, most of the projects we deal with are meant to be self-financing, so there's no recourse. The project has to be able to pay for itself. And so we have to make sure that we articulate very, very clearly the aspects of the project and what we believe makes that project bankable. And we have to make sure that it is a detailed piece of work so that any mitigations are well thought of at the beginning rather than during the project. Because the main cause of cost overruns and project stalling is mostly because the first preparation had not been done properly. One of the other things we see is that for most entrepreneurs in our side of the world, they normally do not have the funding to do this feasibility because it is quite expensive if you want to do a proper feasibility study. So most of these entrepreneurs have very good ideas. They are bankable from the pre-feasibility stage, but in order that you get to the full feasibility stage, some amount of investment needs to be made to ensure that you don't fall into issues going forward. So if there's a constraint, I see more of the pre-investment capital rather than capital post-financial close. Because once you get to financial close, you normally get good people or good money chasing after a few projects. But we are now trying to encourage that pre-investment phase, the basics that we are speaking about, to make sure that we tick the right boxes in the beginning to ensure success.
So project preparation is a subject quite dear to my heart. And just turning back to EBRD for a moment, the clue is in your name, reconstruction and development. But so what are you doing in terms of the project preparation space in financing and technical support to allow developers to actually build them to a bankable standard that would make the commercial banks comfortable? And how do you address the time consistency risk? Because the need is today, not in 3 years' time, when it can take as long as that to prepare projects.
No, absolutely, and this is often exactly the challenge is the different patience of the different players in the system. So yes, as EBRD, we do have our own project preparation facility, which is in principle sort of a framework where, there's a fast-track way of getting legal advice, technical advice, engineering advice, and then this cost, there's a little bit of upfront cost to the government, and then the government is paid back in full by the winning bidder. So it's like a nice cycle, and of course we're trying to have this cycle as fast as possible, but in a complex project, that's still 18 months. And I still remember I moved to Egypt, that was before I moved to Nairobi, and everyone was talking about desalination for tourism, that's crucial, there's not enough water in Egypt. And then so we said a little bit what prices for desalinated waters globally and how long it takes to prepare PPP for 10 desalination plants at the Mediterranean or at the Red Sea. And then the Egyptian government turned around and said, no, 18 months, that's too long. We're just going to talk to the big Egyptian and global construction companies and have bilateral negotiations, and they're going to give us a better price in a shorter period of time. This was my first week in Cairo. I was like mega depressed. All my Egyptian bankers, she's like actually my infrastructure banker, Hannah, she did this really amazing presentation about PPP and desalination, and I just thought, oh my God, we just did all this effort and nothing, you know, we will do nothing about it. But she said, no, wait, you know, you just have to be a bit patient with the government. Now they're going to go around for like 3 to 6 months and talk to all of the companies and try to get a better price and most likely they will come back because they will not be able to get a bank that is closing the deal, that will take the currency risk, that will take the project preparation risk, even if it's and none of the DFIs will be there. And lo and behold, 12 months later, the government came back and said, look, maybe we do one like you wanted. Hannah's presentation was really good. Let's do one at the Suez Canal and do one desalination and a PPP. Let's go and let's see what price we achieve. And ultimately, the price was actually, that was achieved was cheaper than they had thought they could bilaterally negotiate initially. And it was for all these hotel complexes that are close to the Red Sea. So what I wanted to say with this a bit, Froster, is that governments are impatient at the beginning, and they always feel you are too slow as a development bank. But what I like about EBRD is that governments own us. So Ghana has now applied to become a shareholder. Egypt is a shareholder. So it's a give and take between the two of us to say, look, we're trying our best for you. You are our owners, but this is what it takes. And I think then to be a bit more patient at the beginning, tying back into project preparation really pays off in the end. And you attract more capital, you get better pricing, you get more value for money, you get everyone more comfortable with the process in terms of bidding. And then if you do even your advice and structure early on with the banks, then you will have the nice sort of summary of local banks, regional banks, DFIs coming together and help you finance. But I think you need to overcome this initial discrepancy between the patience of the government and the patience of what it takes to develop a complex project.
Thank you. Your story reminds me of the true definition of PPP: patience, perseverance, and persistence. Just turning back to the Ghanaian banks, what would make you more comfortable in supporting infrastructure-linked businesses? Because we're hearing capital's not the problem. We're hearing the DFIs have appetites and ambition to support more, particularly as the government is their shareholder. But what about yourselves? What are you looking for to be more comfortable in supporting infrastructure investments?
Yeah. Thank you very much. As Nana mentioned, the feasibility studies should be well done, and the project should be well structured end to end. We don't start a project and halfway we then realize that there's cross-border risk, there's FS risk, or there's maybe geopolitical risk or something that needs to be factored in. We need to structure from the onset and make sure that all the risks are factored in and mitigants are put in place. We also need to make sure that for us to finance the projects, we need to be part of the conversations early. Then also, we need to ensure that we have off-takers and markets ready for the projects. There are lots of capital looking for projects. And as was mentioned this morning, assets under management alone is over 100 billion in Ghana. And I'm sure with T-bill rates moving from 28% to 4.6%, banks are looking for an outlet for their capital. We're ready to finance projects. We're ready to really support the transformative growth of the economy. What we are asking for is that we need well-structured projects. And how do you get the well-structured projects? Involve us. Let's pick through it from the initial stage and make sure that we are really putting in all the mitigants. You can't cover everything, but at the end of the day, if the banks are in from the onset, we'll be able to help make sure that the projects are bankable and also see through to the conclusion of the projects. There are lots of projects that starts and never ends because the feasibility wasn't made right. And also, the total costs and others, there were no, they were not they didn't factor it into maybe currency fluctuations and all that. Currency risk is real. Thankfully, we've seen some stability in our currency. But if you're going to do a project that has foreign components, you need to have risk management solutions built in there to make sure that you don't really halfway through the project end the project there because currency has moved from 10 to 17, as what happened some years back where some projects have to stall. So for me, in summary, we need to really work together, make sure we have bankable projects, and at the end of the day, we need the DFIs in, we need the insurance companies in, we need the banks. Then also, we need, at the end of the day, the marketing team, because when you have the products and at the end of the day, you can't sell, what's the value in there? So I think we need to work together. There should be a lot of collaboration so that we can really go out there and finance bankable projects. Thank you.
Socrates.
Yes, thank you, Steve. So I'll add to what Ellen and both Nana mentioned. So in terms of some of the risks that are associated with infrastructure financing, this morning we got assured from the governor of Bank of Ghana that he's seeking to build a 15-month import cover. That is reassuring. And hopefully that will be built over the next, call it 2 decades. If that is done, one of the key risks that is associated with funding, especially by foreign counterparties, FX availability, FX volatility will be taken away. The political risk, how do we build the framework such that projects will go beyond administrations? And that, I think, we are more than capable of doing so. And so when I tie in the issue of getting the bankers involved from day one, with these 2 main measures I've mentioned, what it means is that private capital can be unlocked to develop infrastructure. Maybe government can do the PPP by way of funding the initial cost that nobody is sure about, doing the feasibility, going through the procurement, picking the most efficient contractor to develop the road. Because the banks are there, in terms of the flows, how we charge, how we collect the tolls, the banks will take charge. And also, because we use people's money, which is not goodwill, it's fiduciary, we need to make sure we pay the right price. That is to say, over time, if things change, the frequency with which we change the tolls, quarterly, half-yearly, or yearly, we should be ready and willing to imbibe that into the project. Because truth is that uncertainties will continue to exist. Crises will keep coming. It could be this today, it could be that tomorrow. When those things come to the fore, how do we insulate the project? How do we make sure that we collect enough tolls so that in the rainy season, we have some buffers to cover shortfalls in repayments? I believe if we did that effectively, government needs not put money into the infrastructure, even those ones that have been fully built. So the big push ones that are being done today, once they are fully done, we can monetize, give it to the private sector, pay $1 billion, run the road for, say, the next 10 years, 15 years, 20 years, and recoup your money. Once we build in those things, people will be confident enough to support, because at the end of the day, every investor's aim, get my money back and get a bit of return. Yeah. And I believe if we did it that way, we'll be better placed to unlock private capital. Thank you.
Thanks, Richard. Socrates. Before I come to Richard, just go back to you a moment, Nana, because Socrates mentioned something that was very important there, political risks. I've been a strong believer that if you're going to do work in Ghana, you need local partners to manage local risks. What role can GIF play in being a local partner to UK investors that would look to do business in Ghana?
Thanks, Stephen. To the UK investors wanting to do business in Ghana, from the perspective of GIF, we live in the best of times. GIF has been mandated to set up special purpose vehicles for projects, which means that when, as an investor, you come into a country and we're doing a project, you're doing it under a limited liability company's balance sheet. And so you are sort of shielded from any sort of political change. And we've proven that over 10 years, because there were projects that GIF was set up during His Excellency President John Dramani Mahama's first term. There are projects that were originated then, and they have lived through the political lifestyle, and those projects are still there. So in terms of how the setup is done, it is set up very much as private sector led. As President Mahama said, government will facilitate these projects, but not lead, and therefore GIF's mandate does exactly that, where we actually set these things up as private sector to be able to make sure that there's enough. The second reason why it's a good time is that for once, we have the commercial banks looking favorably onto projects. And I say that as an sort of ex-banker, where I used to be lazy as well, but at the moment, because of the single digits, there's no point in being lazy as a banker anymore. And the good thing about us in terms of how we can set up with banks is that we can blend the financing. Banks will go typically up to 7 years. We can go up to maybe 10, 12 years. And so we can look at projects that effectively blends that financing and allows room to make it bankable over time. So for an investor who is coming in to say, I'm bringing in the equity, what's the other side of it? We can effectively work together to blend that financing to make sure that we get into bankability. The other thing I'll mention is that GIF over the last few years have been working really hard to get ourselves accredited to the new forms of financing. So I talk about climate and nature-based financing. We're just about to get accredited by the Green Climate Fund. We're working with the Global Center for Adaptation, and that effectively gives us access to other pools of funding, which hitherto we didn't have access to. And there are a number of great projects that we can look to do. For example, Ghana is full of mangroves. And in terms of development of mangroves, we can take advantage of the carbon market there. And that can do a lot in terms of aquaculture, fishing, etc., and help the livelihoods. That's why we are so grateful to the British government and FCDO, who have given GIF project preparation facility, which His Excellency the High Commissioner was talking about this morning, because that allows us to bring a number of these projects to bankability. So for the investors who would like to come to talk to us, I would say come to talk to GIF, because we can be the gateway to be able to blend funding from our partners in the country, and also to assess other pools of funding which hitherto was not available to us.
Thank you, Nana. Richard, just coming to you, Ghana International Bank sits in quite an unusual space. Ghanaian owned, 100%, regulated here in the UK, and really is in that nexus of financing the trade corridor, connecting Ghanaian exporters and fintechs with the UK banks and financial institutions. From your experience, what is the real bottleneck you're seeing in the UK-Ghana trade finance space?
Right, so two things. I mean, before I answer that question, let me just chip in on this one about, structuring. I think structuring is really key, because we have had a situation where a borrower has come to us from Ghana and says, look, I want long-term funding to buy certain assets. And we've looked carefully at the asset, we looked carefully at what they're going to do, we've talked to the supplier, and we've been able to structure using trade finance, cutting the cost of the project and helping the borrower to save money. So sometimes borrowers just, they have some preconceived ideas that, look, if you want some kind of asset, it should be long-term. Go to the bank, sit with them, talk to them properly, they'll help you to structure. That is what I'll say. But on the question you asked me in terms of what is the constraint, the way I answer it is, we have to look at, between UK and Ghana, what is the main driver of trade there? Financial services is one of the key drivers of trade. Now, if financial services is one of the key drivers of trade, then risk perception comes in here. How do UK investors perceive risks in the Ghanaian market? That is where banks like Ghana International Bank are very important, because we understand the UK investor, and we understand the Ghanaian borrower, and we are able to put the two together. We are able to structure transactions in such a way that it looks good to the UK investor to put funds in. We are able to bring parties from various, across the board, from DFIs and even institutions in the city that would typically not look at African companies or Ghanaian companies. We've managed to bring them on board. So risk perception to us is one of the key areas, and that is one of our ways, or that is one of the key challenges we face in trying to get the investors to perceive the risk in a very different way.
I'll come back to perception a bit later, but in terms of promoting more UK-Ghana trade, what is Ghana International Bank doing in that space today?
I think the first thing I'll say is that Ghana International Bank is here to stay. There are some banks who say they are here to stay, but when things become difficult, they are no longer there. Ghana International Bank is there to stay. I recall in 2022, when things were hard for Ghana, which bank was the only bank that was confirming LCs, that was giving out credit? Ghana International Bank. So Ghana International Bank is here to stay. But we do quite a lot, in terms of, I've mentioned the structure and all the things that we do. But one area that we also find that is important, and is a bit linked to the risk perception, is capacity development. We do a lot of capacity development. We actually do conferences, seminars, and I'll use this opportunity to invite you to our Converge conference, which we are having in August. It's very insightful. If you want to invest in Ghana, please join our conference. So we do quite a number of things in that space to help investors or boost their confidence to be able to invest in Ghana.
Thank you. I'm being given a 5-minute warning here, so let me just go to the point that you just talked about in terms of perception, and this is an open question for the panel. What is the difference between perception and the reality of the risks? Is there a gap? And if so, how do we close that gap of perception of risk to the reality of risk?
I think there is a difference between perception and reality of risk. I think it's because perception is always about generalization. It's never about looking deeply into the exact opportunity, into the factors. And its perception is also, I feel, it's something looking from the distance. And then you perceive something that you don't know, you don't have the details of, you don't know exactly. So I think what I think is important also for us as an institution that's headquartered in London is the presence in our local markets, is having experts in each country. So the expert on trade finance in the Nigerian, the Kenyan expert on long-term infrastructure project finance. Because, if we want to get to the real risk of a project and not the perceived risk, and for that, you have to look closely. You have to come closer, you have to get closer to the investment opportunity, and you have to invest in human capital that understands the investment opportunity closer. So I think I see a key difference, and I think that's why everyone has to become more local in the understanding of the opportunities, but also of the risk, to overcome any bias that comes from perception, to really look at the details.
Thank you.
If I may.
So Nana, before you answer, I just want to add an extra point on this. GIF is on a 10-year journey, and you're about to exit some investments. So you're probably in the best place to talk about the reality.
Well, certainly, Stephen. After 10 years, we have a couple of projects which have matured enough for us now to look for exit opportunities. And as I've said earlier, my friends here are looking for good projects to exit to, so we're working together with them. But the biggest opportunity I find at the moment, to your perception thing, is that there's a perception that projects in Ghana or in Africa are risky. And therefore, people want to put a risk premium on it. Sure. And one way we want to try and change that narrative is working with partners to come up with an infrastructure credit guarantee scheme. It's been done successfully in Nigeria, it's been done in Nairobi, and in other parts of the world. Now, if we're able to set up an infrastructure guarantee scheme, what it does is that it effectively de-risks some of the projects that we have, and then we can go to the local bond markets and the local pension funds so that they too can start to invest in it. We talked about a 100 billion fund, or pool of pension funds that we have in Ghana. So we're working with PIDG we're working with AFDB and AFC to set up an infrastructure credit guarantee scheme. The way it works is that when you put the scheme together, that scheme on its own is rated, independent of the country rating. And therefore, if I have a good project in Ghana, I could go and get the guarantee scheme to wrap around it and go to the market and get participation locally and internationally, effectively reducing that perception of risk down. And we think that once we're able to do such things, we'll be able to first de-risk it, and as the projects are getting successful, that perception that projects in Ghana are risky will start to decline.
Thank you, Nana. Just very conscious of time. Just for one last comment from each of the panelists in terms of what is the one message that you want people in the room today to go away from this panel session before we open up to the floor?
Okay. Yeah. I want members in the group to really go away with the perception that, of the reality that, one, banks in Ghana are ready to really support infrastructure growth. And I remember meeting the governor when he came in. He said that before he leaves, interest rates will come to 10. But governor, it's below 10 now. Okay, so we have the liquidity to fund projects. Banks are looking for bankable projects and will support you to structure the projects. We have the expertise, and we really need to grow together. We have a role to play in the transformation of the Ghanaian economy. And we'll be happy if investors can speak to us. We'll guide you through the risks, the mitigants, and together we can get projects that will help in the growth of our economy. Ghana has significant opportunities, and we look forward to welcoming you to Ghana to work with you as banks to ensure that you meet your objectives and ambitions in the right way. Thank you.
Thank you, Ellen.
Yeah, Steve, thank you. So just to add to what my colleague Ellen has just said, banks are ready to play ball. And more importantly, let me add this point. Banks are ready to do long-term projects. Technically, most people will tell you that banks cannot go beyond 7 years, 10 years. That is normally not the case. It's the bankability of the project, the predictability of the cash flows. Why do I say that? You go to a bank, and then typically my colleague bankers say, will bear me out. You tend to see that of your current account, saving accounts, 60 to 80% is stable over the years. They don't go anywhere. And so if I have predictable cash flows around a project, I can commit that portion of the funding over the long term. The challenge has been, tomorrow, if there's one crisis or the other, how do I get my money back? And that is what makes banks shy away. So to the point Nana made, blending the funding, banks are ready, because without banks playing an active part in the funding of projects, the nation will not go anywhere. And so investors, you are welcome to partner us to do that. Thank you.
Yeah, can I just, so in 66 years ago, the founding fathers formed Ghana International Bank, former GCB London branch. And what they wanted the bank to do is to perform a financial intermediary role. That is very relevant today. For UK investors, if you want to invest in Ghana, I think your first point of call is Ghana International Bank. Come to us, we'll speak to you, we'll point you to the right place, we will open the doors for you, we'll show you the opportunities, we'll structure and we'll work with you, and you can leave smiling with a good project in hand. Thank you very much.
Thank you, Richard. Competition starts.
So moving along from the competition, what I will say is that for the investors here, we are interested in partnerships. We're just not interested in just the investment, but we are interested in partnerships, be they in the form of EPC partnerships with our local content, where there's transfer of skill, etc., and shared risk in there, or be in the form of co-creating these projects through some sort of project preparation where we both sort of contribute to that early development to make the projects bankable so that we can all sort of make money out of it. Those are the kind of partnerships that we are very interested in. And just to assure that we do not have a lack of very good projects. Under the President's vision, we have the 24-hour Economy and Export Acceleration Program, which you'll hear about in detail tomorrow. There are quite a number of impactful, significant projects that are there. Under the Big Push initiative through energy and transport, there are a number of very good projects. We want investors to come and sit around the table with us so that we co-create this thing together and find a way that it will be mutually beneficial, but more importantly, there will be some sort of transfer of skill to enhance our own population as well.
Thank you. And last but not least.
So I think I'm taking the team approach. I think I want you all to think about football. Because I think I want you to think about that investment in long-term project is like playing a really good game. Sure. And I'm not saying this because also the president of Ghana already has mentioned this, because the World Cup is upcoming, because of what happened to Arsenal. No, I'm saying this because this is a team sport. This is a team sport. So, you know, the private sector for me, it's the strikers. These are the ones that want to get the project done, that want to score the goals. And all of us, we're sitting somewhere in the midfield. We allowing like these. Sometimes the best is the short passes, the trade finance. Sometimes we need the 20-year long-term DFI money coming really long pass to the strikers. Sometimes we need a really well-structured midfield. But we don't want to be sort of just having an elegant game with nice structuring. Sure. We want to have an efficient game. We want to have a game that wins. And then we have the insurers that are really at the goalkeepers. We do need the government. We didn't speak at all really about the government. So because we do need the rules, because a game without rules is chaotic, but ultimately also not as good. And we need all of us, the civil society and the people in the country, as the fans who really make the project work and really buy into the success of the project. So I think my final word is just all think about football.
Thank you very much. Our MC is a real taskmaster. He's not opening the floor to questions. So let me just say this. You know, there is one conclusion from this panel, that Ghana's infrastructure and trade finance challenge is not resolved by one single institution. It cannot be solved by the government alone, by the banks alone, or even the DFIs, or by the private sector. It requires a joined-up ecosystem. That is the challenge, but more importantly, that's the opportunity. Thank you very much, and hands together for our amazing panel.
That's it.
Thank you, man.
Do you want to take a picture? Do you want to take a quick picture?